Hello everyone, my name is Jihye Park. You can call me Jihye. I'm one of the MBA students from IPMI International Business School. Today, I'm going to share with you this video as an individual assignment for the subject of corporate finance. The goal of this class is to give the students problem-solving skills in finance from the point of view of management and investors. This video is about my mind mapping of all topics we have learned during past 2 months. It was a pretty short time, however, we have dealt with lots of important content with Professor Louis Zambo. Professor Loy has more than 40 years of balanced work experience in business and academia. This is our pictures. And he was always like, it's very okay to make mistakes when you learn in this class, as long as you try harder. And I was very moved by his words. From now on, let us move to main mind mapping. Stay tuned with me. Okay, there were 6 main topics handled with this class. Financial management, the time value of money, analysis of securities, capital structure, fraud risk management, and dividend policy, international finance. First of all, let's start with financial management. The first chapter is financial management. Full goal of financial management. We have 4 different types of goals. Base objectives, operational objectives, social objectives, research objectives. In other words, financial management is optimal orchestration of internal and external financial resources towards significant and sustainable value creation. We also studied about the principles that are close enough to cover the principal agent problems, like moral hazard, conflicts of interest, which are the good corporate governance principles. It's tariff. The first letter T is about transparency, and A is accountability, R is responsibility, I is independence letter, independence. The last F, but not least better, which is F, is about fairness. Additionally, now we learn the goals of the firm itself other than the financial management goals. It consists of 3 things to be maximized and 1 thing to sustain. The 3 things that have to be maximized are profit, shareholders' wealth, stock price. And 1 significant thing that has to be sustainable is profit. The second chapter is the time value of money and capital budgeting. The time value of money, or TVM, is also one of the important financial concepts. The meaning of TVM is that the value of money yesterday, today, and tomorrow are all different. If we receive $100 today, it's worth more than $100 in the future due to the opportunity cost. We also have studied several applications of TVM, and we did many cases like this of capital budgeting. Through this case study, we got to understand about MPV, PV, FV, IRR, PI, and payback period. And also we learned the Rule 72 valuable parts. Capital budgeting is a decision-making criteria whether we should accept or reject a long-term investment proposal. The concept is about estimating expected future cash flows, evaluating the project based on criteria like that, decide which project is good or bad. Let's move on to the third chapter. The third chapter is analysis of securities and portfolio investment. We run the big picture of investment strategies. There are two types of investing, which are active and passive. Passive investing is just about following the market. On the other hand, active investing consists of fundamental analysis, technical analysis, market and investor sentiment, like that. What is more, we did finance case study of evaluating financial performance of XYZ TBK. We analyzed the data to determine the condition of this company based on their financial last years, and we gave recommendation to improve the health of this company based on our analysis. Additionally, we learned about DuPont analysis like that. Also, portfolio theories. And the fourth chapter is capital structure and corporate structuring. In capital structure, there is a capital structure theory by Modison, and Miller in 1958, which they proved that with tax deductibility of interest payments, the optimal capital structure is 100% debt. Capital structure theory. Also, a benefit of debt financing is that the interest is the tax deductible, whereas payment to equity providers are not. Firms must trade off this benefit against the increased financial risk associated with higher debt level as well. We also study how to surviving and transforming businesses. The way is stop the bleeding, financing, restructuring, temporary pivoting, strategic realignment, redefining core business, new ways of doing business. And there are 8 things to restructure the corporate culture. The first is about capital structure. The second is working capital management. The third is asset structure. Fourth is revenue management. Fifth is cost management. Sixth is cash flow management. The seventh is growth management. And last one is risk management. Additionally, we researched about the famous case of RJR Nabisco LBO like this. And it was very helpful to recognize this concept. The fifth chapter is issues in finance, fraud risk management, and dividend policy. Fraud risk management usually talks about shenanigans, fraud triangle, and also occupational fraud. The shenanigan means actions or omission designed to hide or distort the real financial performance or financial condition of a company. And there are 6 shenanigans. The first is recording revenue too soon. Second, recording bogus revenue. Third, boosting income with one-time gains. Fourth, shifting current expenses to a later or earlier period. Fifth, failing to disclose all liabilities. Sixth, shifting current income to a later period. Seventh, shifting future expenses into the current period. Furthermore, we also studied what is occupational fraud and why it occurred. And we also thought about the fraud preventions. And we also did learn about dividend policy. We discussed about should publicly listed company pay dividends. It was very interesting and gave us lessons. A dividend means the distribution of a company's earning to its shareholders and is determined by the company's board of directors. And here's about dividend policy. When you pay dividends, stockholders receive an intermediate cash reward for investing. And it in dividend policy also involves two decisions. One, how much of the firm's earnings should be distributed to shareholders as dividend? Second, how much should be retained for capital investment? The last chapter is international finance and recent issues in finance. We learned about international finance and issues in finance like barrel crisis and supply market crisis in exchange rate topics. We learned about supply and demand between foreign and domestic currency and what factors that affecting them and about sports and future markets. Other than these 6 chapters, we also did a lot of interesting group activities. It was a great fun, such as book reviews like this. We choose these books and movie reviews like this. Our team watched these movies and event analysis. Our team chose Project Tokopedia merger go-to. And also we did investment simulation like that. In investment simulations, we became a team of fund managers. Our team name was Profit Hunter. Anyway, and choose publicized listed companies and at IDX. We were requested to invest the IDR 1 billion fully by buying and holding until the end of class. Of course, we made weekly portfolio report and end of period pool report. That's all about mind mapping from me. It was well over time to remind the lessons of corporate finance class. Hopefully this video could give you something new to learn. Thank you very much.